What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to our market recap video. It's June 14th of 2022, and it is the day before Fed Wednesday. We're going to preview the Fed meeting. Let's start with our box scores. We had the S&P 500 finishing down 0.3% for today. Didn't it feel like a lot more than that? Wasn't it pretty emotional? After the past couple days, especially yesterday's washout, it just felt like the market should have bounced way more, right? And we didn't even get a bounce. So pretty wild stuff. NASDAQ was up 0.18%. IWM small caps were down 0.48%. The dogs of the Dow were down 0.42%. And the ARK Innovation ETF, which I'm still long, my January 2023 calls. I'm still long on the good days. I'm still long on the bad days. It was up 1.12%. Pretty much everything closed towards the middle end of the day's range. And you can see volatility actually declined in these top three indices, so that is a positive. Breadth was pretty mixed for the session here, and you can see ARK had some positive breadth, and then we ended up finishing up with 38.4% up volume. Pretty lackluster day. Trend model finished out at a -3 reading. What can you really expect ahead of Fed Wednesday? It's kind of interesting because I think most people would intuitively think we had such a big down move, the market has to bounce today, but it's also the day before a Fed meeting. So it's kind of like awkward timing where you typically don't see many investment managers that are going to say, oh, now I'm going to allocate my capital the day before the Fed meeting. It typically doesn't go down like that. And let's preview what is to come. Now, this is like, it's half funny, half incredibly frustrating. Now, there's so many people out there on Twitter. A lot of these people have huge followings. I was just on a Twitter space. I had a Twitter account with 200,000 followers argue with me that a 75 basis point rate hike is not priced into the market. Using Fed fund futures, you can literally see what the bond market is pricing in, and the Federal Reserve never goes against what the bond market is pricing in. We can clearly see by looking it up that the Federal Reserve is expected to hike rates up to this 1.5 to 175 range, and that is a 75 basis point rate hike. In the bond market, pricing in a 98.4% chance that this is going to happen. So it's on Twitter Spaces. I said, hey, the bond market's pricing in 75 basis points. And there were a bunch of people that said, hey, I don't think they're pricing in a 75 basis point rate hike. And it's obvious, you just don't understand the way this works if you don't think they're pricing in 75 basis points. It's like if you order a pizza and you open up the box of pizza and you see that there's 8 slices in the box. And then the person next to you says, hey, we don't know for sure if there's 8 slices. And you're literally saying, dude, I'm looking at the pizza. There's 8 slices right here. So anyway, that is an aside, but that is what the bond market's pricing in. Now, it is possible the Federal Reserve does a 50 basis point rate hike. It is in the realm of possibility. But if the Fed were to do anything other than 75 basis points, they would be going off the script that they've been going on for the past, however many decades that they've been doing this thing. So yeah, that's what I'm expecting for tomorrow. A 75 basis point hike. The market knows it's coming. The market, in fact, tells the Fed what they're supposed to do. That's a relationship that you may or may not be aware of. Powell's basically at the mercy of the bond market. Powell always delivers for the bond market. So anyway, Finviz heat map. Take a look here. We had some mixed action. We did see Oracle was up 10.41%. We did see Tesla was up 2.39%. This was our major capitulatory reading in the tick index. This actually happened yesterday, but just shows us the level of capitulation. Oh my gosh, and KWEB was up 6.66%. 666 team. That might not be a good omen. I'm actually long KWEB via some short puts. I'm long some FXI calls as well. And yeah, these Chinese stocks, they are really bucking the trend of the market weakness. Take a look at what else was pretty strong. Of course, we already mentioned ARK, and we also had the social media ETF, the global autos ETF, which has Tesla as a big component, and software as well was pretty green. So interesting to see that the duration sensitive assets were actually pretty good performers today. Style factors, high beta was up 0.08%. Growth was up 0.08%. Those were our 2 leaders for today. And let's take a look at these markets. Now, here's where I'm sitting ahead of the Fed meeting. So S&P 500 finished down, and we're right at this teal downward trend line. If you pull up some Bollinger Bands on this, we pretty much tagged 3 standard deviations down on the S&P 500. So of course, like clockwork, when you get the high volume selling, this is 1, 2, 3, 4, 5 days of selling. Humans all have recency bias, and it basically just means that what happened in the last few days, everyone extrapolates, that's what's likely to happen into the future. When it doesn't always work that way in financial markets. So in my view, the odds of the next 5 days being as bad as the prior 5 days, they are slim to none. Because we had the CPI report, came out hotter than expected. The markets have been adjusting to it. Now, tomorrow, we're actually going to get the news of the rate hike. Take a look here as well. We had this divergence where the VIX actually came in a little bit. VIX basically put it in an inside day, but always good to see that it is not moving to the upside when the market is moving to the downside. And then take a look. This is the most important thing for me. So let's jump over to treasuries. Before we jump over to the most important thing, treasuries got smoked again. So it honestly seems like these are in sort of like a reflexive, death spiral. I think today may have been some overkill, but we'll have to see. But again, these treasuries, they've been sniffing out this 75 basis point rate hike really since the beginning of June. And, the 2-year treasury yield is going to be more informative as to the rate hikes than the 10-year. But looking at the 10-year, it just goes to show like the bond market's been moving for the past 2 weeks. So I think a lot of investors and traders, they get the most conviction that the market has to go in a certain direction after the market's already moved in a straight line in that direction. So we'll have to see. I think heading into tomorrow, the odds of us moving higher are pretty great because I think everyone's very pre-hedged into the meeting. And we just had a massive risk off event into the meeting. So it's not to discount that we've had a really adverse event in the market. But yeah, we'll have to see if tomorrow can actually stem the tide. Now, this is the thing that's actually pretty positive. Crude oil, it's down 1.75% today. Crude oil originally earlier in the session was up about 2%, and it reversed course. President Joe Biden is actually going to be visiting Saudi Arabia. And hopefully, as a result of doing that, they're going to start pumping a little bit less. But yeah, we've been mentioning this thesis over the past, couple days where crude oil was the major contributor to the high CPI print that we just experienced. Crude oil rose 12% in May. As of right now, crude oil has risen about, I believe it's about 4.5% to 5% so far in June. So long as we continue to see this weakness or more mild action in crude, we're likely going to see a more mild CPI print next month. And that means that the further the market goes down, the better of a buying opportunity it is. And I do think that, the growth stocks are really picking up on that this crude oil is heading a little bit lower. And that's why we did see some outperformance in the ARK Innovation ETF. Granted, this thing has gotten put through the ringer, but it was up 1.12%, and we're seeing that the most high quality growth stocks like DigitalOcean stock actually broke out of value today, and it was up 3.62%. I actually added a position in DigitalOcean. So that brings us over to my trades for the day. Let's dive in here. And I always try to keep it as transparent as possible with you guys. There's a lot of market commentators out there that pretty much what they do is like, oh yeah, if the market goes down, I was hedged. If it goes up, oh yeah, hope you got in on these calls with me. I just try to keep it as transparent as possible. So I closed out my Sky Common Shares. This is the Cloud ETF. I closed out for $63.45. I had paid $65.55. And I still believe in this cloud software space. The reason why I closed that, I wanted to substitute out of this to get more concentrated in DigitalOcean. DigitalOcean, right now, I'd say it's like my highest conviction trade that I have on. And you can see I got long DigitalOcean for $41.92 as a substitution. And then what else did I do for options trades early in the morning at 9:36? I sold some DigitalOcean June 17th 40 strike puts for $1.50 because I would love to buy some of this stock at a cost base of $38.50 because I am of the belief that we got the fly in the ointment CPI print last month. That was could have potentially destroyed the thesis that inflation might actually be peaking. But I think now most players are going, oh yeah, there's no way inflation has peaked. Now we know But I think there's a very high chance that the next print is actually a deceleration from these very high levels. So those are my thoughts heading into Fed Wednesday. I think even if, like, my trend model's at a -3, the trend is definitely to the downside, but at least for a quick trade, I think the odds heading into tomorrow are strongly in favor of the market bulls. So now, after adding that DigitalOcean, yeah, I'm 100% exposed to the market. So if the market goes up tomorrow, that is, positive for me. If the market goes down tomorrow, that's negative for me. So just be as transparent as possible. That said, I think you want to be cognizant of your risk. Like, for you, it's just important to make sure that you're comfortable with everything you're exposed to. If the market goes down tomorrow and, I'm 100% long, I'm perfectly comfortable with that risk that I assumed in doing that. I think for all of us, you just need to be comfortable with the risk that you're taking. If you're, in positions that if they don't work for you, you're going to lose your mind or, whatever, then don't do that. Be in more cash or be in whatever feels the most comfortable to you. But time will tell. Tomorrow, we're either going to be like this or we're going to be like this. So we'll see. That being said, you guys are awesome. Thank you so much for watching these videos. If you have not subscribed to the channel, go ahead, hit the bell, the subscribe button. And with that said, I'll see you all tomorrow. Best of luck out there, everyone. Fed Wednesday is upon us.